Testing, testing. All right. You should hear me now, right? We'll start this all over again. All over again. There you go. Good? We're good to go? I'm so used to looking over here at this monitor. All right, cool. I'm going to replay this again so we get the audio. All right, so folks, welcome. Happy Sunday night. Happy beginning to the new trading week. I am totally psyched. This is going to be a very volatile week. A lot of stuff going on this week. We're going to have the Fed out. The talk of taper is going to be on the table. And we're going to go over tonight, of course, the futures action. We're going to go over valuation, economic data, what's coming out. We're going to talk about China. We have a lot to go over. We're going to talk about why we continue to shoot ourselves in the foot, not just here in the United States, but globally. We're going to also talk about why I believe that what we're seeing is a slowdown in the economy or an anticipated slowdown. And I have a bunch of charts to go over to show you that. So again, I'm going to run through this again. I can't watch this enough. So I'm going to replay this. So I think the bear is more afraid of her than she was. Anyway, so let's say hello to everybody. Cena, hello. Correction. Yeah, looking at the, if you see me talking over here, I move the camera. So I'm so used to looking over here at this other monitor, it's going to take me a while. Bear with me. So, yeah, correction. I think so. You're seeing a lot of sectors begin to give way. We're going to talk about them in great detail. So, yeah, we're going to talk about that in a moment. We're going to go over seasonality as well. And McNeil, hello, sir. Paul M, hello. Anthony, hello. Langley, hello. Falcon, you sounded good even though I couldn't hear you. That's what my wife would say. You sounded good silent. All right. All right, let's do this. All right, so I'm going to kick things off. I want to stay lighthearted a little bit here. I get told sometimes that I'm all business and not enough. I actually have a very, very good sense of humor. But when it comes to business, I'm all business. So I'm trying to work on that. So I was looking at this. I said, you know what? I love this. Let's kick things off with the bear and the lady. And, of course, Dave Portnoy, who I love. Barstool and his girlfriend is outstanding. Anyway, I digress. Barstool's Portnoy circulates petition calling for Ross Gerber, never heard of the guy until tonight, to pay back PPP loans. This son of a bitch. This guy comes out, Wall Streeter, making money, brags about all the money he's making. Ross Gerber received over $500,000 in PPP loans while bragging about his company's assets under management being at all-time highs. These loans were subsequently forgiven. The guy got free money. We paid for it. He should be forced to pay back the money funded by our tax dollars. I'll share this with you. If you want to go sign the petition, please do so. I will be. That's in the box. Okay, going on to economic data this coming week. It's going to be a crazy week, folks. Buckle up. We're going to have, tomorrow's the 20th already. I can't believe it. Tomorrow, not a big deal. Home Builders Index. Tuesday gets a little bit more interesting. It's not going to be a big deal unless there are big misses. Building permits, if it comes out strong, or if they come out strong, that's good. But it doesn't necessarily mean they have to break down. It is a forward-looking indicator. Housing starts, good. It's an indication of breaking ground. I'm going to go over a chart in a moment of basic materials. They're rolling over. We'll talk about why in a moment. Wednesday. This is the Pimp Mac Daddy day of the week. The FOMC statement. Jay Powell comes out with his long-winded press conference. The talk is going to be to taper, not to taper, to taper, not to taper. Folks, listen, let's cut to the chase here. I doubt they're going to taper. I'm going to go over some charts in a moment as to why I don't believe they're going to taper. And of course, there's also China. But what if they taper? So right now we're at $120 billion worth of debt being piled up. This is from Fred, total assets under management. This is what's on the Fed's balance sheet. It grew over $100 billion last week. It's going to continue to grow. So what? We take it down from what, $120 billion per month down to $115 billion per month. So what? So you're taking less gasoline and you're just throwing less gasoline on the fire. It's still growing, but they'll call that taper. So I'm not too worried about it. Will the markets sell off on any taper whatsoever? Yeah, they probably will. So buckle up, volatile week. Let's talk about Thursday. We'll have initial jobless claims. Abel, thank you very much. I'm so used to talking over here. Thank you very much, Abel, for the super chat. Hi, Bob. I hope you had a good weekend. Same to you. Can you please do technical analysis on the chart of Facebook, FB? You got it, of course. Thank you for the super chat. Appreciate that. Of course. Thursday, initial jobless claims. We get that every week. Marquee Manufacturing PMI Purchasing Managers Index. That comes out. We're going to get leading economic indicators. And Friday, New Hampshire sales. So the vast majority of the economic data this week is going to be really on Wednesday, and to a slightly less, not slightly, to a lesser extent on Thursday. Let's talk about market valuations. Then I'm going to segue over to the futures action. We're going into the new trading week with the Shiller PE ratio down from last week, and we were down on the week last week, so no great shock. So we were at about 39 and change last week. Now we're down to 38.29. Still very expensive relative to historical norms. The Buffett indicator. We also have come in here. Last week, this time, we started out the week 3.1 standard deviations beyond the historical norm right here. We remain extremely overvalued. But nobody's going to talk about this until we see a market break. And then they're going to bring people on CNBC, and bulls and bears, and blah, blah, blah. And they're going to say, oh, the market was overvalued. Buffett indicated this, Shiller PE ratio that. They're only going to talk about it after the fact. Didn't you know? Didn't you see? And they're going to pretend I told everybody, and they're going to look like heroes, and they'll be fine. Seasonality. This coming week, folks. This is by far the weakest month of the year for the S&P 500. Actually, not by far. I need to correct that. It's on par with 2 other weeks and less worse than the... Oh, I'm sorry. Scratch that. Scratch that. I'm looking at this bar here. This is by far the worst week of the year in terms of performance for the S&P 500, up only 20% of the time going back 11 years. It's very, very steady, though. I went back and said, you know what, let me go back further in time here. Let's go back to 2002. Not much has changed, right? We're still down in the low 20s. So buckle up, very volatile week. And when you take a look at what the driver is of that sell-off, I pulled up the TLT to see how it performed over the course of time. And here we are. That's 19 years. Even over the course of 11 years, bonds rallied, meaning yields pulled back. So I can't point the finger of blame at rising yields. So it's going to be odd to see what's going to be the problem. Maybe it's just going to be the Federal Reserve. But for whatever reason, this time of the year kicks off that time of year between now and late October, early November, where we begin to go into that Santa Claus rally. This is not picking up the TNX, the 10-year yield. Let's take a look at the trip Qs, seasonality-wise, and then we'll go to the futures action. The Qs are less worse than the S&P 500 over the past 11 years. Relative to the rest of the year, it's a subpar month. But you do have weeks out of the month where the Qs underperform. So just keep that in mind. It looks as though this is going to be a sell-off based on the cyclicals, banks, transports. I'm going to go over the transports in a moment. It's not looking good. So let's go to the futures action. All right, so we're going to begin with the E-minis, S&P 500 E-minis, and we are down about 1/3 of a percentage point. We already have new weekly lows. This is a 4-hour time frame. The NASDAQ 100 is down. No new weekly low. Looks like we're off the lows. We must have gapped down and rallied back. Yeah, they gapped it down, they rallied it back. So we are down on the session. Back to a 4-hour chart. Let's bring up the Russell 2000. We are short of the Russell. We added more to this position last week. The Russell 2000 down well over 1/3 of a percentage point now. And what I'm picking off here is that while we haven't made a new weekly low like the S&P 500, we are breaking a support level at 2,223. Let's see whether or not we close there or do we reverse. 15-minute chart. Yeah, quite bearish. So they rallied it at the open. Sellers moved in. That doesn't bode well for the open tomorrow morning. Watch for support at 2214. Let's take a look at the dollar. The dollar's spiking up. God damn it. All right, so the dollar spiking up, the causation of that is a couple of things. One, rising yields. Two, China. People are worried about China. We're going to talk about that briefly later on. Is there cause for concern about China? Sure, there is. We'll talk about it. I don't want to get ahead of myself right now, but we're going to. It's not a huge concern. It's a concern that we should be focused on. Keep it on the front burner. But as it stands right now, not huge tremors being felt from the events unfolding over there. It seems to be pretty isolated. I don't even want to take a look at gold right now, but so let's bring it up. Oh, it's up. Shocking. We were higher. 15-minute chart. We're going lower. We're going to give up these gains. We're going to give up these gains. Just create an alert here. Okay. Silver. Down. No great shot. Big drop here. I suspect that all your basic materials, excluding aluminum, will be down. Why? you're seeing coal, you're seeing natural gas, you're seeing aluminum rally. Why? The Green New Deal. I'll talk about that on another program, but the Green New Deal is putting a bid under all these names. So that's already getting factored into those commodities. Silver under a lot of pressure here. The 10-year yield, 10-year note, not the yield, the note. Stable, higher a bit, meaning that slight pressure on yields. Bitcoin, it was down earlier. It was down about $600 earlier. Now it's gapped up. At last look, it was down $600. Oil, you're taking it on the chin here. Down well over a third of a percentage point. Copper, oh, brutal. These are your base metals, folks. They're going to get whacked this week. I'm going to talk about the macro charts later on, so stick around. This is all about, if you're wondering why are commodities in an inflationary environment taking it on the chin right now, it's fear about China. And China's slowing down. All right, I think we did this enough. Let's, we could circle back if we have time to follow up, see whether or not we've recovered a bit. I'm very curious to see what the Russell does here. I'm looking for a break. I'm not predicting a collapse. Russell 2000 just took it on the chin. But I am predicting that we're going to see a correction. We did add to our short positions last week. We put on a debit spread, a bear put spread of Microsoft. We're up on that trade. We added more to the Russell 2000 short. We're probably going to be looking to add more to the Q short on a continuation breakdown. Pardon me, my throat's going. Russell 2000 continues to make new session lows. Granted, it's only a 15-minute chart. But it's not looking good. All right, let's move on over to, let's take a look at comments here. And visitors, say hello. Langley, you're funny looking at least. Thank you very much. That's probably the nicest thing anybody said to me all day long. Larry, I vote for the side camera angle. It's too confrontational with the cam in front of you. Really? Okay, all right. I'll take feedback. Please give feedback. Jody, hi, hello to you. Randy, hey Bob, hey Randy. Franklin, hope you enjoyed your weekend. Same to you, and everyone else as well. Always a gentleman, Franklin. Okay, let's take a look at, I'll call them threats. You know, if you're wondering why, well, I'll get to it in a moment. Let's first talk about China. All right, so this is a chart of Evergrande. They've been in the news. If you're not familiar with them, they're a very large Chinese-based, mainland Chinese-based real estate firm. $300 billion in debt. They have market capitalization of about 124 billion, 125 billion, give or take a billion. They're going to default on all that debt. So the question always is, what impact will it have on China, and who has counterparty risk? So I'll talk about both. As it relates to China, you know, last week China, this is the Dow Jones China Broad Market Index. Yeah, it was down over 2.5%. It sounds like a lot. It is a lot. But remember, China is still despite the fact that it's the second largest economy in the world, it's still somewhat of a developing nation in ways. So it's very, very volatile. And last week was no exception to the rule. That you got to expect rapid pullbacks, but that doesn't excuse the fact that the week prior we broke out of a consolidation range. The question is, do we continue to break down here? But at current, I got to say, this is not a bad chart. If you X out last week's price action, if you want to use a smoothing mechanism and go out to a monthly chart, yeah, you're seeing some topping action here, but you're not seeing a bunch of fear, right? So you would think that with this Lehman moment, that a lot of people like to say, the Lehman moment of Evergrande, it's not reflected in equities over in China. And if you're wondering who has counterparty risk, who's on the hook for all this debt, Ashmore Group, they're over in London, BlackRock here in the United States, UBS, that is Switzerland, HSBC, British company, Hong Kong based, and Vanguard, US based, not on this chart, privately owned. Vanguard has exposure, big exposure. There's a lot of exposure to this company in a lot of ETFs here as well. So, of course, it's going to be a small component of those ETFs. So, if Evergrande is a standalone situation and it goes away, no big deal. I'm not seeing a major problem here. If you see a cascading effect, meaning this is the first domino to fall, then we have a problem. Because remember, it was Bear Stearns that went first, then Lehman, right? So that was the domino. Bear Stearns was then the first domino, then Lehman fell. So watch out, watch the headlines. If you start to see more announcements, big problem. Let's circle back to, I don't want to say just the United States, I want to say the globe. I think we just had an alert fire off. Okay, so our alert for the price of gold just broke. Yeah, they're going to dump it. I just went negative. Yeah. Five-minute chart. We're going to come down here. We're going to come down here. 17.49 the ounce. Okay, let's go back to whatever you want to call it, biofascism, whatever. But for whatever reason, and I believe it has to do with the World Economic Forum, the Davos crowd, they are ring fencing all the big Western powers. United States, Australia is done. New Zealand, done. France in chaos. Great Britain, demonstrations here in New York City this weekend, massive demonstrations, public unrest all over the place. It's coordinated. It's all the same stuff. And we continue to shoot ourselves in the foot. Over the weekend in Washington, the J6, this is just the Federal Reserve, not the Federal Reserve, the federal government trying to build on the January 6th event, trying to get people in trouble. These guys made complete and utter morons of themselves over, these are FBI agents, and they didn't mix into the crowd very well. They got picked off. The only one to get arrested at this event was supposed to be a big Trump event, was an FBI agent, literally. So, self-inflicted humiliation upon ourselves. They brought out the National Guard for this event. However, you take a look at the southern border, there's no National Guard down there. Look at this. This is all self-inflicted. This border was sealed 8 months ago. It was sealed. You had the remain in Mexico policy. That is gone. This is what we're left with. So what I'll ask you to think about is that unless, of course, we have all of these people that are coming across with doctorate degrees and they're rocket scientists or doctors, we have a problem. We have a major problem because you have spelling wrong. I forget the name of the ETF. Here, this will do. We'll go to Kathy Woods' fund. You know, automation, artificial technology, it's all taking over. So the last thing that we need in this country, or in what they're doing with migration over into Europe, is low-skilled workers. You need skills in this new age. The last thing you need is low-skilled workers, because if they're just going to be on the government dole, then what value add is there to any one nation? They're not adding any value, and if anything, it's going to cause more social unrest. You're going to suppress wages, and there's going to be social unrest. So this is a major, major issue all over the globe. And in New York City, they're like around the rest of the globe. Australia, major, major riots this past weekend over in Australia. Horrible video, especially down in Melbourne. A lot of police brutality, disgusting stuff. And the social unrest continues. If they get away with the vaccine passport, expect this. It may not sound that bad. They make it sound really, really good. But what's coming down the pike is not necessarily a replacement of the US dollar. What are you going to replace it with? The SDR out of not the World Bank, the European World Bank. I forget what it's called. Christine Lagarde's bank. The SDRs out of there? I don't think so. It's special drawing rights. They're going to go to the digital dollar. And once they digitize the dollar and the paper money goes away, and God forbid they ban cryptocurrency, they are going to be able to track everything you do with that vaccine passport. So if you're not a good citizen, like in China, this is the Davos crowd. If you're not a good citizen and your social credit score is not good, you can't work, you can't buy stuff, your currency can expire if you don't. Suppose the Federal Reserve needs to get inflation running hot. Well, all they need to do is say, listen, your money's going to expire on XYZ date if you don't spend it. Oh, okay, I'm going to go out and spend it. I'm going to lose it. That's how they're going to manage the economy, and that's how they're going to control the public. It's going to be a great black market. The black market's going to boom. So this is what we're doing to ourselves. And when you take a look at countries like Sweden, they never locked down. I don't believe they have vaccine mandates. Fact check me on that. But the deaths per 100,000, this is a country that never locked down, and you never hear about this. One of the lowest death rates in the world. United Kingdom, lots of socialism, lots of mask mandates. Here. United States, right below it. France, very, very hard. They're hammering their citizens. All right, they're up here. So the refusal to adopt the Swedish version of how to manage this disease, the refusal to talk about it, tells you that there's something very, very nefarious going on here. And if you take a look, this is from back in July of this year, late July. Daily COVID deaths in Sweden hit 0 as more nations braced for more lockdowns. So I don't make this stuff up. So, you know, what the end game is, it's pretty obvious. They're going to want to have vaccine passports, digital dollar. You're going to have a digital euro. You're going to have a digital British pound. But it's all going to be able to track your movements, track what you do. Social credit score. It's coming unless we fight it. Okay, so let's talk about why we believe that there could be, let's see how we're doing for time. 6:32, we're pressing along here, good stuff. Why we may be looking at inflation, yet declining growth, stagflation, more stagflation. And the inflation conversation has to do with the Baltic Dry Sea Index. For those folks out there not familiar with what the Baltic Dry Sea Index is, it's the measure of the cost of shipping dry bulk goods. Not oil, not natural gas, dry bulk goods. Mostly stuff made over in China or commodities sent over to China, coal, etc. The cost of shipping those goods are shooting through the ceiling. Now, you may be saying, what are you worried about a slowdown for? Because the GDP, as noted here, for the United States continues. It's above the pre-COVID levels. What are you talking about? What's your problem? You may be asking yourself. I don't have a problem. I just have an answer. And the answer of why GDP is where it is right now is this: the Federal Reserve's balance sheet. You take this punch bowl away, this gets real fast. So this is only going higher. So you can talk about taper all you want. Going from 120 billion down to 115 billion, yeah, quote unquote, is a tapering, I guess. But you're still fueling the fire. This trend is still going to trend up higher. So while we may get a correction here in the short term, I got to be honest with you. I'm going to be looking for opportunities to get long of this market. If they're going to keep pumping money into the system, what are you going to do? Take your shorts off at some point in time and begin. Keep cash on the sidelines because we're about to get some great buying opportunities in the coming weeks. So let's talk a little bit about the indications of the market that we may be seeing a slowdown in GDP and a correction in the stock market. One of the major indexes that I use is my canary in the coal mine for equities and where they're going are the Dow Transports, because the Dow Transports are very economically sensitive. So if you take a look at the Dow Transports peaked out, despite the fact you've had new highs recently in the Tues, S&P500. They peaked out back in May, the week of May the 10th. We have a lower high. Now we're threatening to break down to new lower lows. Last week they were down over a half percentage point. Let's take some comments here. Langley, yeah. No, I'm open, man. I'm not the cutest guy in the world. Talent, Bob, you are the only guy I have found knows what he's talking about. Thank you very much, Talent. Appreciate that. Jody, thumbs up. Thank you very much. Randy, you bot. Thank you, Randy. You bot. That's it. Let's go back to that chart. Thank you for that. I had a brain boop there. We're a family-friendly show. Look at this. This is the Direxion Robotics Artificial Intelligence and Automation Index. The market was hammered last week. This ETF was up 2.75%. Think about this. Yeah, it's a little bit overbought. Think about this. Robotics, artificial intelligence, booming. What are we doing here? Where is that? What are we doing? What is the end game here? It's insanity. This is self-inflicted. We're doing it to ourselves intentionally. It's crazy. All right, so the Dow Transports. Back to the Dow. Oh, let me go back to comments real quick. Chinner. Hey, Chinner. Would you consider that people in Sweden are generally healthier than the U.S. life expectancy? Yeah, I wouldn't argue that, but I think that it's a valid point. But the thing is that they never locked down. They never took the draconian steps that we did here, or that Australia is doing now. They're pretty much at peace. their economy is doing okay. And in fact, I have a chart here. They're not even in debt. All the countries that are heavily in debt right now are the ones locking down, oddly enough. Usually, I guess the average GDP, the average debt to GDP of each country that's locking down right now is over 100%. Back to the Dow. This is Orwellian, man. Back to the Dow transports, very weak. This is our canary in the coal mine. But we want to dig down. We want to see what's really doing poorly out there. What's really up in the Dow transports? Well, let's take a look at the railroads. The railroads are getting decimated. Decimated. We have not only put in a double top, we have now broken down, not just last week, the week prior, to new lower lows. So whenever you're looking at a chart and you say, okay, when is the trend over? It's very, very simple. Double top, that does not make a trend end. It doesn't mean anything. It just means that maybe you got a consolidation that's about to build, right? You don't want to go shorting based upon that. You want to go shorting based upon when you put in your double top and you break to new lower lows. That's a major problem. A major problem. Unless you're short. The airlines. The airlines are stuck in a triangle formation. They peaked out back here in March. And ever since then, double top, they've broken down to new lower lows. I think that this is a dead cat bounce. You had a nice rally back here the week of the 23rd of August. We're struggling to get back above the 200 period moving average. You have a ton of resistance above at around 95 on this index, on the XAL. I think that these Stokes are rolling over. This is a weekly chart. Ultimate oscillator, rolling over. Can't get back above 50. The Dow Jones Trucking Index. This is a monthly chart. The reason why I have a monthly chart, because we have a few trading days left to go. We want to acknowledge that. Maybe we'll close at new all-time highs on the Dow Jones Trucking Index. We can do it easily. The reason is that we hit new highs this month, right? But the thing is that we have now broken down with a bearish key reversal bar, and we are now back down below the lower band of support. Double top on RSI, no break to a new lower low yet. A big bearish divergence here with ultimate oscillator versus the price action on the Dow Jones Industrial Average. Excuse me, on the Dow Jones Trucking Index, my apologies. Let's go to a weekly chart. Wrong chart. Babo. Yeah. So we hit all-time highs. Now we're rolling over. Lower highs. RSI never even got back above 70 on the break to a new higher high. Look at this volume last week. This is not mom and pop selling 100 shares. This is Vanguard, Fidelity, BlackRock. They are dumping transport stocks. And you want to do even a little bit more of a deeper dive. And keep in mind, all the while, you have the Baltic Dry Sea Index, the cost of moving goods, continue up higher, right? So that's inflation. You're seeing the equities, underlying equities, decline in value, yet the cost of shipping goods is going up higher. So what that tells me is that it's stagflation, stagnant growth with inflation. Next chart, basic materials. We just look at copper. Other than aluminum, basic materials are getting hammered. We're seeing a lower high in RSI. We're rolling over on a weekly time frame. This chart here, the stochastics on the Dow Jones U.S. Basic Materials Index is a cluster F. Price action last week, horrible. We closed down over 3%. We're going lower. Volume, very heavy. Institutional distribution. More evidence of a slowdown. Monthly chart, Dow Jones, U.S. Containers and Packaging Index. This is getting very granular now. So far in the month, we have a bearish key reversal. Maybe we'll close at new all-time highs. I don't know. I'm not that smart. The probabilities, though, are very unlikely that we're going to do that. As we're setting up right here, right now, if we by chance happen to take out the lows of last month, that would be a bearish engulfing or an outside reversal bar. Very, very bearish stuff. Volume thus far, to be fair, is light on the month to the downside. Let's pull up a weekly chart. Here's your double top. The prior peak at 559.71 was hit on May the 10th. Double top the week of August the 30th at 553.17. Take your crayon out. Memorialize. Lower highs all over the place. Now the question is, do we break down to new lower lows? Right now, we can just go by the assumption that we're in a consolidation range. It doesn't necessarily mean that you got to go shorting this sector right now. But if we break down below 487.14, pick your favorite component of the Containers and Packaging Index and one that's got a similar chart to this one, short it. Now, you may be saying, maybe it's time then to go buying the Tues if the cyclicals aren't working. Don't. Tues last week. We're short of the Tues for disclosure purposes. We did not go adding last week because it did not break support. We put it in a high here. The week of September the 7th. We have since rolled over. That week we flashed a bearish key reversal bar. Continuation breakdown last week. We are at support. So we're going to see whether or not we break to new daily chart. We're going to see if we break to new daily lows. This is the wrong chart. But on a daily time frame, the Tues have broken support. Stokes have rolled over. They're down below 50. Rallies tend to fade. So if by chance they happen to turn this around, oh, we rallied back? Awesome, on gold. Good. NASDAQ 100 has rallied back as well. So if they happen to turn this around tomorrow morning, they open the futures up green, don't go chasing that rally. I was warning members all last week about chasing the rally in the morning. They love to paint the tape green in the pre-markets. They'll open it up green, and what happens? They fade the rally. All you need to do is take a look at the price action of the S&P 500. Case in point, on Friday, I guess it was the Tues that looked better. What the heck was I looking at? Either way, don't go chasing the rally. Rallies tend to fade when you have Stokes down below 50. And for the S&P 500, that's exactly what you saw most of last week. You saw it here. Not so much here, but you certainly saw it on Friday. So, caution. Microsoft. We opened up a short position. We may be looking to lean into that short position. When are we going to do that? On a break to a new weekly low. The reason why? Here's your quarterly chart of Microsoft RSI 95.81. Yearly chart, RSI 95.65, leaning into the third standard deviation Bollinger Band. It's ripe for a pullback. Will it crash? I doubt it. But when you take a look at a daily chart of Microsoft, cha-ching, we got on Friday. Hopefully we get a continuation breakdown. 294 is our next price target. We break that support level. We're probably going to be leaning in to our short of Microsoft. Okay. Let's go to comments. Oh, Randy, you've been in U-Bot since then? Good for you, man. What settings do you use on your ultimate oscillator setup? Out of the box. I don't change the ultimate oscillator. The only settings that I change are with my Bollinger Bands. I like to use both the 2 standard deviation and the 3 standard deviation Bollinger Bands. Otherwise, I just use out of the box stuff. I like to keep it simple, so I don't go too crazy with it. Randy, ports are backed up, less stuff to move for transporters. Retailers warning, but you would think that they would have pricing power, right? The pricing power. I think it has to do with China, fears from China. And China's slowing down if the Everguard issue becomes an even larger issue. And also you have a major real estate problem over in China. They have literal, look up, type into YouTube, ghost cities. And they literally have cities they built years ago. They're blowing up the buildings now. The buildings are literally falling apart. They're horribly built. And they're blowing up a lot of buildings now to take some of the capacity offline. So who has possession of that debt? It can't all be Everguard. So that's the concern that the markets are having. But as it stands right now, I haven't heard much about the Chinese forcing more liquidity into the markets, getting worried about more dominoes to fall. So that's why I want to take a step back. We don't want to be doom and gloom here. We want to just, take a look at the markets. What are the charts telling us? Yeah, it was a bad week last week, but this monthly chart, not looking horrible. The trend is still up at current. So we file it away. We visit it from time to time. We keep a watch out for it. Other than that, nothing else to do. Let's talk about our friends over at TrendSpider. Folks, if you're not using TrendSpider, you should be. Automated technical analysis. Automate your grunt work. Improve your accuracy and reduce costly analytical mistakes. I use it all the time. 35% discount code below. And there's a link. You can go take a demo tour. They have a 7-day free trial offer. I give it away free to our gold and silver level members, and you get a discount if you join our titanium level. I can't give it away free for the titanium level. It just costs me too much. But you can get your discount. All right, let's, I have a couple of chart requests I need to go to from members. One I just realized I missed the other day. So I definitely have to do that one. That's for a new member too. I'm taking a look at my other screen here to bring up the members area. All right, what do we got here? I think Franklin had one. Henna, yeah, Henna had, sorry Henna, if you're watching this, I apologize. Henna had Tesla. I missed it. That was on the 10th. Bad me. I skipped right over it. Franklin has DSX. For today, he entered that, so I didn't miss that. That's good. So, and we'll do Able. How much time do we have here? We only have 8 minutes, so I'm not going to have much time to do anything else. DSX. Dana Shipping. That pulled back, huh? Let's go to the monthly chart first. We saw a nice breakout this month on the monthly time frame. But what happened here, I'm going to take off the automated trend line. This is the automated technical analysis, folks. And if you're wondering why we formed this wick on a monthly time frame, this is why. Resistance. So think about if you were long and you had an alert up here saying, all right, let me know when we touch resistance, fire off, you could have booked profits. But we faded. We have several trading days left to go in the month. Maybe we'll break out to new all-time highs for all I know. I don't know. We also, on a weekly time frame, we tapped the third standard deviation Bollinger Band in red. We do have support down here at $5.62. I'm going to create an alert there. We'll keep some sensitivity on. And we'll keep it active for 10 days. Good. I want to overlay on top of the weekly chart, monthly resistance. I think it's reflected. It's not reflected. Why is it not showing on here? This is why. Boom. There we go. For whatever reason, it's not showing me the resistance from last week. We do have more resistance up here, and the dashed line is the overlaid monthly resistance level. I wonder why it's doing that. This resistance level is not showing on the weekly chart. Huh. Maybe a glitch. Let's go to a daily chart. Yeah, I would have to say be careful here. I had an alert that fired off on this one. We broke support. We're coming down here, right at around $5.62 per share. I would revisit it then. This company's been around a while. Let's check out the seasonality for this coming week. It's fairly a weak seasonal week, so expect lower lows here. All indicators are implying we're going to go lower. Tesla for Henna. Is Henna on by chance? She's one of our newer members too. Say hello, Henna, if you're on, please. I'm sorry, I apologize for missing you. All right, Tesla's looking good here. We recaptured resistance, now support at $7.20 per share. We retested this month. We rallied, got a continuation breakout. I'm not going to go to seasonality because there's not enough data. Let's confirm that. Well, it looks like there is enough data. How far back can we go here? Oh, there is enough data. Okay. I like to go with a minimum of 10 years. So we have data here. The next 3 weeks, very, very unfavorable weeks over the past 10 years. So warning flag on Tesla going into the new trading week. But I'll tell you, the weekly chart looks pretty good. We had a bearish key reversal bar last week. I would do this. Did I say bearish key reversal? If I said that, I need to amend that. Bullish key reversal. I'm going to keep this active for a couple of weeks. good to go. There it is up here. Daily chart Tesla. Yeah, I mean, we're looking good here. Looks like it wants to make a go at resistance. I wouldn't buy it right now. Too much risk into resistance. But if we break out, I'd be a buyer of Tesla. So I'd be a buyer on strength. Wait for that alert to fire off. Looking pretty good. Able, I think on Facebook. Yeah. All right. So Facebook, rough week last week. We were stopped out the week before last, and thank God we stopped out because the break was not pretty. Let's go to the monthly chart. We're definitely going to have seasonality here to take a look at. So far in the month, we have a bearish reversal bar. Weekly chart, close to, but not exactly an outside reversal bar on the week. Volume rose. So you saw some institutions taking some money off the table last week. I would expect to see that to continue, but I'd be looking for support down here. Again, these are the automated trend lines. Click of a button. Pop. I'm going to create an alert. And if it holds those support levels, well then, there might be a good trade to be had here. So Facebook in all probability is going to come in and head lower. Daily chart. Whew, bad day on Friday. Again, the value of the automated trend lines, a big time saver. Here's support, now resistance broken. Don't be the least bit surprised to see a rally tomorrow in an effort to try to recapture the support level. Much as what was done back here when we broke support, rallied back, then ultimately we rolled back over. I suspect that that's going to be the exact same thing that happens here. So I'm going to be honest with you. I'd be looking to short Facebook. If we do rally back, and I would get short. Let's check out seasonality. Seasonally, not a bad relative to the S&P 500, not half bad. Usually up over 50% of the times. So not a bad week in terms of seasonality relative to the universe. So this is only 9-year period. There's not enough data. That's why. Okay. I think that's it. Let's circle back and take a look at how equities are doing. And the dollar's coming off. That's why gold rallied back. This is a 5-minute chart. It's way too short time frame for me. Dollar coming in a little bit. Remember the TLT seasonality chart I began with on tonight's show, that seasonally TLT rallies very, very strong this coming week. That means bond yields pull back in. Gold remains positive, looking okay here. Russell 2000 remains weak. We did bounce and recapture support. Now we're threatening to give it back up again. NASDAQ 100 still cannot close it green, or turn green, I should say. Let's go to the S&P 500. We'll leave it off with that. S&P 500 still down, just shy of a quarter percentage point. The trend here is clear and defined. So I'd be very, very cautious this week. We know that seasonality is going to be a problem. So please don't go buying any morning rally. Please, I beg of you, don't do it. These markets are very, very, they're on thin ice right now. And I'm not predicting a stock market crash. I'm just saying it's time for a correction. So thanks for being here. Thanks for spending your Sunday here with me. I really appreciate it. Franklin, thanks for another great review before the week. And let's all have a profitable trading week. You took the words out of my mouth. Yeah, everybody, please have a profitable trading week. Enjoy the remainder of your night. Thanks for being here. Smash the like button. Subscribe to the channels. Tell a friend. And take care. Be well.